we have finished with the basic, that includes your definition, then features of partnership, then we saw the rights of the partners, then partnership deed, what is a partnership deed, what is the importance of partnership deed, then what are the different elements of the partnership deed, that is how is that particular partnership deed prepared. And we have also seen that if the partnership deed is absent, okay, if partnership deed is not there or any agreement is not there, written agreement is not there and only oral agreement is there, and if there is some dispute that arises in the firm, then that dispute among the partners can be solved by provision of Indian Partnership Act. So if there is no deed, we have seen that there are two things, okay. One is that profit sharing ratio and loss sharing ratio among the partners should be equal, and the second is interest on loan by partner, that is whatever loan has been given by partner to the firm, interest on that loan is 6% per annum. And rest of the things, if there is no provision in the partnership deed, then as per the provisions of Indian Partnership Act, there will be no interest on capital, interest on drawings, okay. Then no partner's salary, no partner's commission, nothing, okay. So then we saw what are the important provisions of some Partnership Act and then the liabilities of partners. Then in transaction between partnership firm and partners, we have seen what is the interest on capital, interest on drawings, then loan to partner and interest on loan to partner, correct. Then we have also seen what is the rent paid to the partners, then partner's salary, partner's commission. So basically we have seen the basic concept of all this, okay. And there is one more, interest on current account, that we will see at last. It is similar to interest on capital, okay. Now that we know what is the capital account and current account, we will see that interest on current account at last, okay. So now what we will do is, we will go to interest on capital and we will learn how to calculate interest on capital, okay. We will see how to calculate interest on capital. So okay, see here, example 3. On 31st March 2025, capital of Y is 90,000. On 1st October 2024, drawings is 20,000. On 30th June 2024, additional capital is 10,000. And on 1st May 2024, there was a withdrawal of capital of, okay, this question has a printing, there is a missing. So this withdrawal of capital is 15,000 over here. Just change this, 15,000. And rate of interest, don't keep it as 10%, make it 12% per annum. Just make this correction in the book. So withdrawal of capital number is missing over here, so that you change it, and interest on capital is 12% per annum. Okay. Now find opening balance and interest on capital. So see here, in this type of question, okay, where opening balance is missing, okay, you have to see what method is used for recording the capital, or what is the method of recording the journal entries for capital. Is it a fixed capital method or fluctuating capital method, okay. So when opening balance needs to be calculated, you should know method of capital, that is whether it's a fixed capital or fluctuating capital. Because when you are see, we have seen in the previous example, right, you are calculating the opening balance and you are calculating the interest on the basis of opening balance, interest on capital on the basis of opening balance. So if the opening balance is not given, then you have to calculate the opening balance. For calculating the opening balance, you have different formats of the capital account for fixed and fluctuating method. So you should know which method is followed over here. So in this case, what they are saying, we have to calculate opening balance and interest on capital if it is a fixed capital method and if it is a fluctuating capital method. Okay, so if it is a fixed capital method, we have to calculate the opening balance, and if it is a fluctuating capital method, we have to calculate what is the opening balance and interest on capital. So first is fixed capital method. Okay, so what do you remember about fixed capital method? Fixed capital method, we have two accounts, capital account and current account. In capital account, we will be recording only 4 transactions, that is opening balance, closing balance, then your additional capital, okay, additional capital introduced, and withdrawal of capital. That's it. Rest of the things we record it in the current account. Correct? Now here the purpose is to calculate the opening balance of the capital. So let us prepare a capital account over here and find out what is the opening balance of the capital. So just prepare a capital account over here. We'll solve it together. Okay, just prepare a capital account over here and we will see here. Now opening balance, we will write everything here in the capital account. So what is given? See, this is the capital balance as at the end of the year on 31st March 2025. So if nothing is given, we are assuming that it's a normal credit balance. So on 31st March 25, to balance, see, you should know the format. To balance, carried down. To balance carried down. How much is that? 90,000. Okay. Then drawings. Now see, this is a fixed capital method. So will drawing come in your capital account? No, drawings will be recorded in the current account. Correct? Current account. So we are not considering drawings over here. Okay. Then 30th June 2024 additional capital. So what is the entry for additional capital? Bank account debit to capital account. So 30th June by bank account. How much is the balance? By bank account 10,000 is the additional capital. Correct? Then withdrawal of capital. Withdrawal of capital will come. So withdrawal of capital entry is capital account to bank account on 1st May 2024. So 1st May 2024 to bank account 15,000. See, pay attention over here. This is very, very important. This type of questions will come. They will not simply ask you to calculate the interest on capital. Okay, they will be giving you something like this. Now see here, once we know the format of the capital account, what all entries should come? Opening balance, closing balance, withdrawal of the capital and additional capital. So 3 entries are already done. So which entry is missing? Opening balance. So this opening balance is a balancing figure over here. So if you see here, now if you total it, now this total comes to what? 1,05,000. Correct? And 1,05,000. So 1,05,000 minus 10,000 will give me a opening balance. So sometimes this type of questions will come wherein you need to calculate what is the opening balance. So by balance brought down, and see, when you are calculating something else other than the closing balance as a balancing figure, you have to put this sign, asterisk mark. Okay, just to know that this is a balancing figure that we have calculated over here. So that comes to 95,000. Got it? Done? Done till here? Okay.
Yes, ma'am.
Now we will make a same timeline, whatever we made it no in the last question, we will make a timeline. So this we will continue making this timeline for 2-3 questions, then we will stop. Okay, so timeline. So what is the timeline now? See, we need a opening balance. So opening balance on 1st April 24. How much is that? 95,000. Then what is the change? Next date comes on. See, what is the next date on? See, 1st May 2024, there is a withdrawal of the capital. Correct? Withdrawal of the capital. So 1st May. So see, purpose of preparing capital account was to calculate this missing opening balance. Okay, missing opening balance. Purpose of preparing a capital account was only that. Okay, rest of the things we will get it from question itself. So 1st May there is a withdrawal of the capital. So 1st May, I'll just write it. So 1st May 24, withdrawal of capital. So 95,000 minus 15,000. So your capital balance is 80,000. This is withdrawal of capital. Okay, then what has happened? The 30th 6/20/24 there is an additional capital. So 36/24 there is an additional capital. So 80 is the balance plus additional capital of 10,000, that comes to 90,000. Okay, then now pay attention, don't write anything. Now drawings is on 1/10/2024. So 1/10/24 drawings 90,000. Should we take it? Should we take the drawings? Yeah, tell me yes or no. Not 90,000. How much is the drawings? Drawings is 20,000. Okay. So drawings, should I do it? Should I reduce it from 90,000 drawings? Yes or no? No. Okay. So why we can't reduce the drawings? Because I told you, right, when we started this. Okay, when we started this, where is it? When we started this, we have written no, drawing should not be considered in calculating interest on capital. Withdrawal of capital, yes. Drawings, no, because we are calculating interest on drawings separately. So remember that. This is one of the common mistakes. Okay, because you will be in a hurry, right? So they will give you drawings and withdrawal of capital both in the question, and you will consider both the things over here. So now what you are going to do over here in notes is you will just make a box over here and you will cross it with the red pen and write drawing should not be considered, so that you remember it. So this 90,000 balance will be there, means interest on capital will be given on 90,000 balance till 31st March 25, and for drawings we will charge the interest on drawings separately. So drawings will not be considered in calculating interest on capital. Did you understand this? I know you will keep on forgetting. That is the reason we will be doing some mistakes deliberately while solving the example, and then we will be cancelling it with the red pen or something and writing this, so that you remember and recollect it on time. Okay, that's fine. But now it's clear, no doubts. So now let us quickly calculate. I hope till here it's done. If timeline is not done, just do it, and let us now quickly calculate interest on capital. So this 1st April to 1st May, so that is only 1 month. That is 1st April 24 to 30th April 24. So that comes to 95,000 into 12%. I told you, I told you to change it into 1/12 because it is 1 month. Then you have it from 1st May 24 to 30th June 24. So that is 2 months. So how much it was? 80,000 into 12 by 100 into 2 by 12. And last is 1st July 24 to directly 31st March 25. So that comes to July, August, September, October, November, December, Jan, Feb, March, 9 months. So 90,000 into 12 by 100 into 9 by 12. Again cross check. 9 plus 110, 12. Whether it's 12 months or not. Cross check. Always cross check. Okay. Now calculate and tell me. Quickly in 2 minutes. So all these clouds, na, draw it in your notes also. Yeah. So first you get it as 950. Then second is 1600 and third is 8100. So total interest is 10,650. Done? We will go to the next question now. I mean the same question, B part. Now see here. Same question, but they are saying it is a fluctuating capital method. So let us understand the difference now. Okay, again in fluctuating capital method also opening balance is missing. So we will be preparing a capital account. Okay, but now understand this very carefully, the difference between the two. But while preparing a capital account for this, if it is a fluctuating method, that means all the entries will be there in the capital account. So see, if you, whenever you have prepared this capital account, fixed capital method capital account, you have included only 4 entries. That is opening balance, closing balance, additional capital and withdrawal of capital. But now while preparing a capital account as per fluctuating method, we will also be including drawings in that capital account, because remember, right, fluctuating capital method means all entries in one account. Fixed capital method means only 4 entries in capital account, rest of the entries in your current account. So while if it is a fluctuating method, then we will be including the drawings also to calculate the opening balance. Now understand this very carefully. Only to calculate the opening balance we will be using the drawings. Okay. For calculating interest on capital, drawings is not considered. But for calculating the opening balance, since it's a fluctuating method, capital method, we will be including drawings in our capital ledger account. Is this clear? Interest on capital calculation method will remain same. But for calculating your opening capital balance, we will be including drawings. Okay. So let us do that. So this is B. B is fluctuating method. Correct? Let us prepare a capital account. Okay. Now fluctuating capital account in fluctuating capital method, same things will come. Okay, whatever were there in that, everything will come, but drawings will also come. Okay, so let us just write down everything. So first is capital balance at the end of the year 90,000. Let me just write it. Capital balance at the end of the year. So that is what, 31st March 25 to balance carried down 90,000. Okay, then what do you have? you have 31st, then you have drawings on 1st October. So I'll write 1st October 24. So drawings entry will be drawings account debit to capital account, correct? So 1st October 24 to drawings 10,000, correct? Then what do you have? You have this withdraw additional capital and you have withdrawal of the capital on 1st May. So we will pass these two entries also, additional capital and withdrawal of capital. So first withdrawal of capital will be capital account debit to bank account. Entry should be very clear. And additional capital will be bank account to capital account. So on the credit side, by bank account 10,000. So now just take a total and find out the opening balance. So drawings is 20,000, is it, or 10,000? Sorry, drawings is 20,000. Let me just write it 20. I wrote it as 10. So 1,25,000. 1,25,000 minus 10,000. So now if you see here, opening balance which is come over here now. By balance brought down is 1,25,000 minus 10, correct? So that is 1,15,000. So can you see the opening balance calculated over here and opening balance calculated over here is different, although the question is same, because the method of accounting is different. So our purpose of preparing a capital account is to find the opening balance. So once the opening balance is there, we will be preparing a number line now. I mean timeline. Correct. So on 1st April 24, balance was 1,15,000. Then what has happened? There is a withdrawal of capital on 1st May. So on 1st May 24 there is a withdrawal of capital. So balance was 1,15,000 minus 15,000. So it has become 1 lakh. Then what has happened? Then on then there is an additional capital. This date I didn't like. Right. This June, no? So 30th June 24 there is an additional capital of 10,000. So 1 lakh, we'll calculate it only. So 1 lakh plus 10,000, so you have 1 lakh 10,000, correct? And then you have drawings on 1/10/24. You have drawings of how much? 20,000. Now remember, even here for calculating interest on capital, drawing is not considered. Okay, so interest on capital method will remain same, calculation of interest on capital. Okay, drawing will not be considered, but for calculating opening balance of the capital account, it depends on what method is used, whether it's a fixed method or fluctuating method. So 31st March 25. Okay, fine. Now, so let's calculate the interest on capital here quickly. So again, same thing, interest on capital, in the same way we will calculate, correct? So first is 1st April 24 to 30th April 24, that is 1 month. So it was earlier 1,15,000. So 1,15,000 into 12% into 1/12. Then we have from 1st May 24 to 30th June 24, that is 2 months, and it was 1 lakh rupees. So 1 lakh into 12 by 100 into 2 by 12, and then we have from 1st July 24 to 31st March 25, that is 9 months. It is 1,10,000 into 12 by 100 into 9 by 12. Calculate it. Cross check. 9 plus 2 11 plus 1 12. Always cross check. Okay. Calculate the interest and tell me. First, calculate it. So you should practice calculation. Okay, you don't have calcs. Check your answers. So be very clear. Now we will be solving lot of questions related to interest on capital. So you should know now, okay, what needs to be considered, how it is to be calculated. If opening balance is not given, what should be done. Everything should be very clear. Okay. Interest on capital calculation is done. Okay, now we have seen interest on capital concept, how it should be calculated, and journal entry also we have seen except for the closing entry. Okay, now let's move on to interest on drawings calculation part. Okay, closing entries we will see it later on. So for interest on drawings, now understand this. So there are basically two types of drawings. Okay, so whenever there are basically two types of drawings. One is irregular drawings. Okay, as the name, it's, don't write anything, just listen now. Irregular drawings, and second one is regular drawings. Okay, so what do you mean by irregular drawings? Okay, irregular is by the different amount at different intervals. Okay. Okay, different amount at different intervals means what? Whenever the partner is in need of the money, he will withdraw it. Okay, he will withdraw it. So sometimes in 1 month he will withdraw 5,000. After 3 months, if he wants 10,000, he will withdraw 10,000. After 5 months, then he doesn't want anything, he won't withdraw anything for a long time. Then he may withdraw 15,000-20,000 after 2-3 months. So different amount at different intervals is known as irregular drawings, whereas regular drawings is opposite of that. So same amount at regular intervals. Okay, so that means the same amount, a fixed amount is withdrawn at a regular interval. So maybe every partner withdraws 3,000 at the beginning of every month, or every partner withdraws 5,000 at the end of each quarter. So are you understanding? The amount is same and the interval of withdrawing is also regular. Okay, so these are two types of drawings. Just write this. Okay, so now see, depending on what type of drawing it is, there are different ways of calculating it. Okay, let us understand those different ways of calculating depending on different types of drawings. Okay, so interest on drawings. So first we will see sometimes, very rarely, this is very rare, rate is not per annum. Okay, if rate is not per annum, then irrespective of it, whether it is a regular drawing or irregular drawing, what you need to do is, you just need to see what is the total drawings into rate by 100. We are not concerned with the period because rate given is not per annum. Now this is very rare. Okay, it will be given like rate is 10% or rate is 12% without the words per annum. If that is the case, then we just have to take the total drawings into rate by 100. We are not considering the period of drawing. Now, usually rate will be per annum only. Okay, so rate is per annum. Now don't write anything. Okay, wait, I'll give you time to write. Don't write anything. This is little tricky. Understanding interest on drawing, interest on capital was simple. Interest on drawings is little tricky, so pay attention. Don't write anything. I'll give you time to write. So rate given here is per annum. So usually you will have this type of questions only. Okay, very rarely sometimes they have asked this type, the other type. That is the rate was just 10% and they are not given the word per annum. So you are assuming that rate is not per annum and you just apply the flat rate. Okay, when the rate is not per annum, that type of rate is known as a flat rate. Okay, now this type of questions are very common. Rate is per annum. So when the rate is per annum, your calculation depends on what type of drawing it is. Okay, so first is we will talk about irregular drawings. So what is irregular drawings? So drawings are not at a regular intervals. Okay, drawings are not at a regular interval and we are just calculating the interest on the basis of whatever amount is withdrawn at that particular time. So this has two methods. One is simple method. Okay, directly calculate. Okay, proportionate interest on drawing for each drawing. Okay, for each drawing we will be directly calculating interest on drawings proportionately. Second one is the simple method and second one is product method. Okay, so we will learn what is a product method. So in this, interest on drawings is equal to total product into rate by 100 into 1 by 12. So this total product is nothing but amount into period till end of year. We will learn how to do this. Now understand one thing, either you do it by simple method or product method, your answer will be same. Your final answer will be same. Okay, so as such, if they are not asking you to calculate interest on drawing by any specific method, you can follow any method. But if in the question they are specifically asking you calculate by simple method or calculate by product method, then you have to use that method. Okay, answer will be same. Okay, so let us just do one question over here, case 1. So you write this chart later on, I'll give you time. Now we will just go to the case 1. Okay, see here what is happening is rate is given per annum. Okay, rate given is per annum and it is a irregular drawing. Okay, so in that, see you have examples. So 1st May 2022 drawing was 5,000, 30th June 2022 drawing is 8,000, 1st December 2022 drawing is 3,000 and 31st Jan 2023 drawing is 4,000. So year ended is 22-23. We have to calculate interest on drawing at the rate of 12%. Now here what we will do, since the rate is given per annum and it is a irregular drawing, we can calculate it by simple method also and product method also. We will be calculating it by both the methods. Okay, just to understand both the methods, we will calculate it by both the methods. So before that, what I'll do is I'll draw a timeline over here. Okay, to understand. So year begins somewhere over here, 1st April 2022. So on 1st May 22 there was a drawing of 5,000 rupees, correct? Then what has happened on 30th June 22, drawing has become 8,000. Then 1st December 22, drawing is 3,000. Then 31st Jan 23, drawing is 4,000. And this is the end of the year. Okay, here Jan, no? Jan. Okay, now see here what is happening. Now first drawing that is 5,000 rupees was there from 1st April to 31st March. Okay, that amount was withdrawn from 1st April to 31st March. So interest on the drawing will be calculated for how many months? May, June, July, August, September, October, November, December, Jan, Feb, March. That is 11 months. Okay. Then this second drawing was there from 30th June to 31st March. So June is not considered over here. So July, August, September, October, November, December, Jan, Feb, March. So that comes to 9 months. Correct. Then this third one, 1st December to 31st March. Okay, this was there from December, Jan, Feb, March, 4 months. Then this fourth drawing is on 31st Jan. So 31st Jan means it was there for 2 months only, Feb and March. Okay, again we won't be drawing these timelines for each and every question. This is for understanding. Okay, just for understanding. So this is the beginning of the year, this is the end of the year. So understand, interest on drawing is calculated from the date of drawing till the end of the year. Okay, always. So from date of, just write it somewhere here, date of drawing till end of the year. See, capital is different, interest on capital is different, interest on drawing is different, calculation is different. So capital, as and when it changes, we calculate it proportionately on that balance, whereas interest on drawings is calculated from the date of drawing till the end of the year. Now let us calculate this with the simple method. So first we will calculate this with the simple method. As I told you, when it is a irregular drawings and rate is per annum, we have two methods. So first with the simple method. So simple method is nothing but, see, we will write down date. So first drawing was on 1st May 2022. Correct? 1st May 2022. How much was the amount? 5,000. So it will be 5,000 into 12 by 100. Okay, into how many months? It was there for 11 months. Use the timeline. It was there for 11 months. So 11 by 12. Okay, second drawing is on 30th June 2022. So 30th June 2022. How much is the amount? 8,000. 8,000 was there for 9 months. So 8,000 into rate. Rate is 12%. It's given in the question. Into 9 by 12. Okay. Third one is 1/12/2022. So 1/12/2022. So 1/12/2022. How much is the amount? 3,000. That was there for 4 months. So 3,000 into 12 by 100 into 4 by 12. And fourth is 31st Jan 2023. So 31st Jan 23. Amount is 4,000 into 12 by 100 into 2 by 12. Now here you don't have to cross check, it won't be 12. Okay, because this is a different method of calculation. So it won't be 12. Like the way we did it, interest on capital. Now just calculate and tell me first. First is 550. Then second, it's easy numbers. No, I have given you all the easy numbers. 12% interest rate, so calculation becomes easy. So at least you don't have to scratch your head in calculation. Understand the concept first. Calculation is fine. Then
120.
Then
80.
80. Yes, 80. So total. What is the total? 7. 1470 total. Correct? Now we will do the same thing in product method. So product method is like your weighted average method. So if you remember weighted average method in maths, statistics and all. So product method is like that only. So here date, amount, okay, period, okay, what period it is. So time period up to 31st March 23. Okay, that is from the date of drawing till the end of the year. And here you have product of amount and amount into period. Okay, make this 4 columns, and same thing we will be writing it over here. So date is, so first drawing was on 1st May, correct? We will take it from here only. 1st May 5000, and period is 11 months. So 11 into 5, 55,000. Okay, 11 into 5. Then second drawing is 30th June. So 30th June, 8,000. So June means after that how many period? What is the period over here? 9 months. So it is 9 months. Okay. So this comes to 72,000. Then third one is 1st December. Amount is 3,000 and period is 4. What is happening? So we have 12,000, and last is 31st Jan. Amount is 4,000 and period is 2 months, so 8,000. So you understand now, from period we have taken it from here only, timeline, same thing, same logic, but product method. Okay, so now what you are supposed to do, you have to take a total of this product. Okay, so total of this product comes to 1,47,000, and now you apply that formula. Interest on drawings will be total product into rate by 100 into 1 by 12. So 1,47,000 into 12 by 100 into 1 by 12. So if you solve this, you get the same answer. As I told you, both the methods you will get same answer. Though this is like a weighted average, you calculate, no? So this this month's period is like a weights. Okay, somewhat like a weighted average you calculate, but you don't divide it by total number of weights. You use that product and you apply the rate. Now see here. Okay, so you just write it over here. Both product method and simple, write it along with me only. Simple method will give same answer. Okay. Now let us go to no, when the rate is not per annum. Okay, we will just solve that. Rate is given without per annum. Now here what did I tell you? You just have to multiply the flat rate. Now here you can see, right, there is no per annum over here. So now Mr. X withdraws 6,000 at the beginning of every month. Find interest on drawings at 10%. Per annum is not given. Now these are very rarely they will ask you. Okay, sometimes tricky questions, sometimes it may come, but you should know it. Okay, so in this case, what did I tell you? Interest on drawings will be total drawings into rate by 100. So we are not considering any period over here. Why? Because rate given is not per annum. Okay, so total drawings is 6,000 per month into 12. Annual drawings will be into 12 into rate. Rate is 10 by 100 is the answer. So this is a question of regular drawings where the rate is flat. So this comes to 72,000 into 10 by 100. Correct? $7,200. Done. Next, Mr. X withdraws 1,08,000 during the year. Now this is a one time he has withdrawn it, but rate mentioned is 20%, but per annum is not given, so it's a flat rate. So when per annum is not given, same formula we will use. Interest on drawings is total drawings. So total drawings are given over here. Okay, rate by 100. So that is 1,08,000 into 20, not 10. 8,000 into 20 by 100. Okay. So 21,600. Done till here. Now we will go to regular drawings. So irregular drawings was easy, and if there is a flat rate, that is also easy. Now we will go to case where rate is per annum and it is a regular drawings. Okay, it is a regular drawings. Okay, so if remember this type of questions will come. Okay, a lot of questions in regular drawings. So regular drawings means what? At regular intervals, and amount is also fixed. Amount of drawings is also fixed and it is at a regular interval. So for regular drawings, what we need to do is we need to calculate something known as average period. Okay, so we will know how to calculate this average period. So once we calculate the average period, we will be using that in the formula. So average period is time from first drawing till year end plus time from last drawing till year end divide by 2. Okay. Now once we calculate this average period, we will be calculating interest on drawings. Interest on drawings will be nothing but total drawings into rate by 100. Same formula we have used till now, right? Even in regular drawing. So here what is the advantage? Since it's a regular drawings, we will be using average period by 12. Okay, so what we done in the simple method, we have multiplied with actual number of months from the beginning of the drawing till the end of the year. So here what we will do is we will calculate the average period and then we will use that average period in the formula. So total, if you see, that formula remains same, total drawing into rate by 100, and instead of multiplying it with the each individual period, since the amount is same, we will multiply it by average period. Now let us go to We will solve some examples in this. So rate per annum is given and it is a regular drawing. So we just saw what is the formula for this. So interest on drawings is nothing but total drawings. So when I say total drawings, is always total drawings per annum into rate by 100 into average period by 12. Okay, now average period formula we have already seen. Okay, so from first drawing till end of year, I will just write EOY plus last drawing till end of year divide by 2. Now let us understand how to calculate it. Example, let's say partners are drawing a fixed amount on first day of month, first day of every month. Okay, so now what is the first drawing? First drawing is on 1st April. Let's say it's a 25-26. Year is 25-26. Okay, so 1st April 25. And last drawing will be on 1st March 26. Correct. So what is the period from first drawing till the end of the year? End of the year is 31st March 26. Correct. So if you see here from the first drawing till the end of the year, it is how much? 12 months. Here it is 1 month. Last drawing till the end of the year. So average period will be 12 plus 1. That is first drawing, last drawing till the end of year divide by 2. So that is 13 by 2. Okay, so it comes to somewhere 6.5. Did you understand how to calculate this? We will solve the examples now. Interest on drawings. Okay, so Mr. X withdraws 3,000. Okay, at the end of every month. Okay, find the interest on drawing. So now let us first calculate the average period. So first drawing, when is the first drawing? First drawing at the, see, it is at the end of the every month. So let us say that this is also year 2025 26. Let us assume any year you can assume if the year is not given. Okay, so so first drawing will be on what? 30th April 25. Correct. And last drawing will be on 31st March 26 because it is at the end of the year. So what is the time period from first drawing till the end of the year? End of the year is 31st March 26. Here you have 11 months. Correct. April is gone. So May, June, July, August, September, October, November, December, Jan, Feb, March. 11 months. And this is from 31st March to 31st. So it is 0 months. So now what is the average period? Average period will be first drawing till the end of the year, that is 11 plus 0 divided by 2. So how much do you get? 5.5. So use this in the formula. So interest on drawings is nothing but total drawings into rate by 100 into average period by 12. So total drawings. Now see, most of you will make a mistake over here. Total drawings is not 3000, it is 3000 into 12. Okay, 3000 into 12 is the total drawing. Rate is how much? 12 by 100. Average period is 5.5 by 12. So calculate. Yes, 1000. Correct. 1000.
980.
Correct. 1980. Done. Now see here. Let me just tweak a question little bit. So this was A. This was A. Now let me just tweak a question over here. So this was C. 3000 every month. So here also he has withdrawn rupees 3000 at the end of month, but EOM is end of month, but only from April to September. Okay, only from April to September that person X has withdrawn 3000 at the end of every month. So first drawing, so I'll just write it as first drawing. Okay, first drawing was on 30th April 25, and last drawing is when it is, last drawing is on 30th September 25. So you have to calculate average period till the end of the year, that is 31st March 26 in both the cases. Okay, so here it will be 11 months, and here it will be from September, so October, November, December, Jan, Feb, March. That gives you how much? 6 months. Correct. So average period will be 11 plus 6 divided by 2. So that comes to 17 divide 17, right? 11 plus 6 divided by 2. 17 divided by 2. 8.5 months. So use this in the formula to calculate interest on drawing. So interest on drawing will be 3000. He has withdrawn it for how many months? April, May, June, July, August, September. That is 6 months. So 3000 into 6 into 12 by 100 into 8.5 by 12. Did you understand this? So that comes to
Understood.
it's a maths only. So you will get this type of questions also. So whatever type of questions you get, you should be able to solve it. You should know average period formula and interest on drawings formula. Just write this B example also. Now let's go to the next question. See, X withdraws 8000 at the beginning of every quarter. Okay, so I hope you know what is a quarter. In case if you don't know, so just write somewhere in the margin. So first quarter is from April, May and June. Second quarter is from July, August, September. Third quarter is from October, November, December, and fourth quarter is Jan, Feb, March. Okay, so basically there are 4 quarters, each quarter of 3 months. Okay, now see, X is withdrawing at the beginning of every quarter. Find the interest on drawing. So when is the first drawings? Beginning of the quarter. So first quarter begins in the month of April, beginning of the quarter. So it will be on 1st April, let's say 25-26 only, for the year 25-26 only we will do. So 1st April 25. Okay, and then last drawings will be at the beginning of the last quarter. When has last quarter started? In the month of Jan. So it will be in 1st Jan 25. So this till the end of the year, and this till the end of the year. Okay, so this comes to how many? 12 months, and this comes to 3 months. Correct. So what is the average period? (12 plus 3 divided by 2). That is 15 divided by 2. So you get 7.5. So interest on drawings will be total drawings. How much is total drawings? 8000 into 4. See, it has been withdrawn only 4 times because it's 4 quarters, na, beginning of each quarter. So one in April, July, August and Jan. So into 4 into 12 by 100 into 7.5 by 12. Okay. So if you solve this, you get the answer. solve it. Okay, so this was how much? 2400 we calculated it, na? Over to write. Okay, now let's go to the next question. Mr. X withdraws 7000 at the middle of each quarter. Okay, find the interest on drawings at 36% per annum. So middle of each quarter. So understand what is middle of each quarter. So your first drawings, okay, first drawings will be, see, middle quarter is April, May and June. So middle of quarter you can consider it as 15th May. Okay, and last drawings will be 15, see this is 15th May. So last drawings, last quarter is Jan, Feb, March. So it will be 15 Feb. Okay, so from here we will be calculating period till the end of the year from first drawing and last drawing. Now see here, even though it's a middle of in between the month, what you have to do is you have to consider May as half month. Okay, so from June, so June, July, August, September, October, November, December, Jan, Feb, March. So you have 10 months. So and half month of May, so it will be 10.5. Okay, and here in the between this month, that is Feb half month and March, so it will be 1.5. So your average period will be 10.5 plus 1.5 divided by 2. So you get 6. Now using this, we will be calculating interest on drawings. So interest on drawings is, total drawings is 7000 in each quarter into 4 into 12 by 100 into 6 by 12. So how much do you get? Oh, so it's not 12 by 100. Na? Here the rate of interest is changed. Okay, let me just change the rate of interest. Here it is how much? 36%. So into 36 by 100 into 6 by 12. So calculate the interest. So 5040 is the answer. Okay. Now we will just tweak this question. Now this is your homework. Okay, I want you to do this by tomorrow. It will hardly take 2-3 minutes. You have to do it. So see, rest of the question is same. 7000 is withdrawn. Okay, 7000 is withdrawn at the middle of the quarter. For first 3 quarters. Okay, so what are the first 3 quarters? April to June is first quarter, July, August, September is the second quarter, and October, November, December is the third quarter. So you calculate it. Okay, this is your homework. Fine. Now let's move on to the next question. So here, now listen here. See, sometimes what they will do is they won't give you the drawings. Okay, they won't give you the monthly drawings or like that. They will just give you whatever is the amount withdrawn during the year. Okay, and rate. And rate is per annum. So whenever they are giving you amount withdrawn during the year, okay, total amount withdrawn during the year and rate, we are, as when the dates are not given, we are assuming that it is regularly withdrawn in between the month. Okay, so here in this case, always average period will be 6 months. Okay, so interest on drawings in this case is interest on drawings when the drawing dates are not given, only the lump sum amount is given. Okay, so it will be total drawings, same formula, total drawings into rate by 100 into average period by 12. Okay, So total drawings is 1,08,000 into rate. Rate is 20%. So 20 by 100 into 6 by 12. This is important. You have to take a period as 6 months. That is what we are assuming is, when the period is not given, we are assuming that the amount is withdrawn evenly throughout the year. So we are taking average period. So what is average of 12 months? 6 months. Okay. So it comes to 10,800. Did you understand this?
Yes, ma'am.
So now this is written here. Okay. This is written here in the last point of drawings. Wait. Let us go to this one. This point. So this is important. In case when the total drawings are given but frequency is not given, in that case we assume that drawings are made in the middle of the month. So average period considered is 6 months. Okay. So when lump sum amount is given, we are using the same formula whatever we used it for your regular drawings, but we are assuming that it is evenly taken at the middle of every month. Okay, so average period is considered as 6 months. Done. So this completes your interest on capital and interest on drawings calculation. So tomorrow we will be doing some calculation related to partners commission. We have learned some part of it like before and after, right? Manager commission in last year, before, after and all that. Okay, so we will be learning different scenarios, different cases of calculating partners commission. See, it is similar to calculation of manager's commission. Only thing is partner's commission is given to a partner. Okay, so that's the difference.